Hello, I'm Dennis Alvarez, Senior Director of Capital Markets for Nasdaq Corporate Solutions Advisory Services Group. In conjunction with CIRI's annual conference, I wanted to bring you our team's outlook on the Canadian market. In April, the TSX gained 2.4% compared to the S&P 500's rise of 1% and the Nasdaq 100 gaining 0.9%. The metals and mining sector posted the strongest gains and asset flows into the sector that continue to remain flat. Consumer stocks were the biggest laggards in April, most notably discretionary. On the short interest front, the consumer staples sector saw the biggest declines on the month, reducing 8%, while the healthcare sector was up 45%. This was driven mostly by a 280% increase in Prometic Life Sciences after they announced a secondary offering. Turning to the Canadian investment managers, Nasdaq Corporate Solutions Advisory Services has noted the following investment manager trends for Q2. Stocks continue to be favored over bonds. Tech has been seen as a shining light this year, a key alternative to the resource and financials heavy TSX. Energy stocks are seeing inflows as investors put money to work into the undervalued energy names viewed as having strong balance sheets and sustainable dividends. EU and Japan seem to be attracting macro-based asset flows, while investors are becoming more blasé about immediate US returns. Most Canadian managers still prefer US equities over domestic ones and will favor domestic equities with US-based earnings for pure Canadian portfolios. Moving on to the European and Asian investment in Canadian market. Foreigners returned to Canadian equity in January and February following a big outflow in November, December of 2014 when oil prices crashed. April saw European fund outflows for the first time since QE began. Lastly, we noted the following trends for US investment managers in the Canadian market. Technology and media companies continue to be the favorite play for long-only managers. The short play in energy has muted somewhat as of REIT. We are seeing some long-term value investors buying energy companies with strong balance sheets. We have also seen a pullback in shorts against Canadian banks, betting on a housing market decline. While US investment appetite for Canadian companies continues to be lukewarm at best, companies should continue to market to these investors. Thanks again for joining us, and stay tuned for more insights throughout the year from Nasdaq Corporate Solutions Advisory Services team. I look forward to seeing you all at CIRI's annual conference in Banff.